Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back, you're watching Traders Corner, and as always I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi Julieta.
Garth, very interesting, the Financial Times came out with an article this week about the sound of silence across all asset classes, and we have been complaining about a lack of volatility in the market, but for the portfolio at least, it's been quite a good week.
Yeah, it has been quite a good week. We finally started to see a couple of our trades now starting to move in the right direction. In fact, all three of the long positions that we've got on, the top 40 Aspen and our Platinum ETF, all of those are now starting to move up, and it's looking good for us. So finally, because you're right, it has been a number of weeks where the portfolio has hardly moved much. But now suddenly this week we've managed to put on about a 3.5% gain on the portfolio for the week. So things are looking up for us.
Okay, well, let's start off with the long in the top 40, so that being the first position, probably one of the more recent ones.
Yes.
How's that playing out?
Yeah, it's looking good. If we have a look at the chart of it on the screen, now what I've got here is the top 40 future. This is the June contract, which expires next week, Thursday, the 19th of June. And we went long last week. What I'd identified here was that on this hourly graph, we had a rising trend, and at the time I saw this consolidation pattern through here where it's sort of more or less gone down to test the rising trend, and then we had started to break out through that resistance, and I used that as an opportunity to buy one top 40 future at 45,020 with a stop loss at 44,620. That stop loss would have meant that basically we'd take out these lows over here. You can see that over the last, I mean, this really goes back, where I'm pointing to on the mouse there, that's the 22nd of May. So to give you an idea, this is nearly 3 weeks of trading action where we've gone sideways in pretty much a 1% trading range. It's been very, very dull. And but the thing is, things are actually now starting to look a bit more interesting. If you have a look here, where I've introduced that red overhead resistance line, that level is 45,200. And you can see the market's bumped up and tested that resistance about 6 or 7 times over the last 3 weeks. Finally today, now we actually are starting to break above that resistance. And that's quite interesting, because as we approach the futures closeout, which is next week Thursday, we've got, after today, we'll have 6 trading days left, remembering that next week Monday is a public holiday. There's a massive amount of optionality. By that I mean lots of call option strikes, particularly, that have been written up at 45,800 and 46,000, that sort of area. And my suspicion is that the market now is probably going to target those option strikes. So I think we're starting to move higher from here, and we'll see another leg to the upside. This long position that I've entered, I think I will probably look to sell it out in that area if we get a move up towards there to 45,800 or 46,000. Or alternatively, what I may just do is leave it out to the expiry, being next week Thursday.
Can you do that? I mean, and happily enough, and you can just kind of cash in if it does close above, 45,000, whatever. These futures, these Aussie 40 futures are cash settled futures. Okay. So if you leave it to expire, then it's fine. You just basically, the position will close off and you'll receive whatever profits are due to you. The alternative to that is that you can actually roll it over into the following contract, into the September quarter. But I don't think I'll be doing that. I think I'll probably rather look to bank the profit. The market is still at pretty lofty levels, so I don't want to stay long of this thing for too long. But my feeling is here that we're seeing another leg to the upside beginning now. Okay, so that's working out quite nicely. And then Aspen, it took a couple of weeks, but it also, in fact, just after last week's show, it started breaking out above, and that sideways holding pattern that it had been in for quite a while. So how's that trade looking?
Yeah, it's looking good as well. So what we had identified with this trade was that we had a primary uptrend. Now that uptrend that I've shown there actually goes back about 2 years, which is a lot further to the left on this graph than what I've got here. But we tested that uptrend area recently, just above 270 Rand. The stock has now, my thinking was that we've got this large sideways consolidation. The likelihood is that is a consolidation in time as opposed to a consolidation in price, and that is likely to resolve itself to the upside, especially given that we had tested this long-term uptrend support. That has indeed happened now, and we've seen the stock breaking out to the upside. Initially, remember, I only bought a half position here. because I was preempting the breakout. So I went in with half a position. I bought 375 CFDs for us at 277 Rand, and that was in the anticipation that we would see a breakout through that resistance at 280 Rand. Now we've seen that breakout, and you can see the stock has actually been consolidating quite nicely above that 280 Rand breakout area. And it's come back and given us a number of retests of that 280 Rand level, which have given us nice buying opportunities again. So what I did, remember I said that I would go in with a half position, then I would add if we saw a break through that resistance. I've gone in and I've added another 175 CFDs to our portfolio at a price of 280 Rand and 50 cents. And I'll use the same stop loss on that of 269 Rand. Now this is what we call pyramiding a position, and it's not something we do very often on this show, but it's the concept of adding to your winning trades. It's fine to add to a winner. And the way you typically do it is it's called pyramiding. If you think about the structure of a pyramid, you start with a large base at the bottom, and then as you add layers to it, so the actual size of the incrementally added positions become smaller.
Okay, so you don't add, I mean, you wouldn't go in on the same size position as you had in the initial trade?
No. The reason being that I'm using my same stop loss, but I'm paying a higher price. So therefore, in order to ensure that my risk remains in check, I actually have to do a smaller position. What we'll have on this position, on this trade now, in total will be around about a 2% capital risk. My initial risk was only 1% capital risk, but with adding the second position onto it now, we've now got 2% capital at risk. And that's the concept of pyramiding, and it's fine. It's a good thing to do, provided you're buying or you're adding to your winning trades. It's fine to add to a winner. It's definitely not fine to add to a losing trade, and that's a very, very bad habit. But adding to your winning trades is fine. It's actually not a bad habit, and it's how some traders really can be very, very successful.
Okay, well, it's nice to see Aspen also leaping up there. Garth, and then the last one is New Gold Platinum, which was probably the most frustrating of them. Frustrating not just for you, but I suspect for everyone out there who has gone long of Platinum in the expectation that there would be a rally as a result of the Platinum strike, and has yet to see that happen. But it is kind of inching up.
Yes, now finally we've actually got a little bit of action in this thing today. What we saw here initially was the fact that this New Gold Platinum ETF had been consolidating into a falling wedge structure, and it had broken out to the top of that. Now that's typically a bullish setup, and you would usually expect it to go back to the start of where that wedge pattern began to form. We went long of 800 CFDs at 152 Rand 60 with a stop loss at 147 Rand, and it's been grinding along. As you can see, for the last 3 or so weeks it's really been grinding along. It's been very frustrating and boring because the trade's sort of not working, but it's not working either. But anyway, as things stand today, it's actually broken through this area of overhead resistance here at 155 Rand, which is quite an exciting development. And this now comes on the back of the fact that the platinum price now does look as if it started to move. And this is since the government effectively pulled out of the discussions between the unions and the miners.
Although, as they would say, they're giving them space to negotiate between the two parties.
I mean, the government certainly didn't hang around for very long in that fight, and then they've proceeded to sort of throw their hands in there.
All that eating, breathing and sleeping of mediation hasn't really worked out for our new mines minister.
Not at all, not at all, not a good start. But anyway, be that as it may, it does appear that we've now started to see the platinum price reacting a little bit, and hopefully, well, certainly for this trade anyway, hopefully there's going to be a bit of follow through, and we'll see the price of this new Plat ETF moving up towards that area at 162 Rand, where there's quite a lot of resistance.
And presumably it's also a factor of the Rand having weakened over the last couple of days, and you know, there's I suppose a lot of expectation that we are going to get a ratings downgrade on Friday, and if we do witness or expect to see a further weakening in the currency, so that would be good for the New Gold Platinum ETF.
It would, if we did see the Rand weakening. I mean, I think a lot of the fact that we're all expecting this downgrade, it's not going to come as a surprise if and when it happens. But certainly it can't be good for the Rand. Let's put it that way.
Okay. Goss, okay, so those are the 3 open trades that you've got on the go at the moment. This is one that you would like to consider, but you've not actually entered into it. But tell us why you've got your eye on Exxaro. Yeah,
I'm watching Exxaro as a potential short in the week or weeks ahead. You know, a lot of people, including myself, feel that the market is stretched. At some point we're going to be due a correction, but when that comes, we still wait and see, because it's taking a long time to happen. But in light of that, if you are looking for a possible short in this market, you ideally want to be shorting stocks in the weakest sector, and the weakest stocks in the weakest sector preferably. Now, resources have been quite weak in our market recently, and Exxaro has been one of the weakest stocks in the resource sector. Now, what I want to show here is take a look at this pattern that's been forming on Exxaro over the last number of months. In fact, this is from a year ago. This descending triangle pattern has been forming. And you can see quite clearly there's resistance offered by this downtrend at the top of the triangle. And then there's this major support area at 137 Rand. But when you see a pattern like this, where you've got consecutive lower highs and then a flat bottom like that, what is it telling you in terms of the internal dynamics between buyers and sellers? Well, what it's telling you is that every time this price tries to poke its head up, the sellers are there aggressively pushing the price down, and as a result the price can't get as high as it did on the previous rally. And then you've got this lateral area of support, but historically, whenever I've seen patterns like this, these types of setups typically do break to the downside. That support level at 137 Rand has been tested on numerous occasions now over the last year, and I'm pretty confident that at some point I think this is going to break to the downside. I want to now, basically I'm going to be watching if it rallies towards 145 Rand and gives us a reversal from that level. I think that will probably be my area that I'll look to go short.
Okay.
And then I'll put a stop loss somewhere up above 150 Rand in case I'm wrong. Have a look, just in light of this, have a look at this chart of ABLE, African Bank. It was doing a very, very similar thing last year before the stock broke down aggressively. And this was actually at 28 Rand 50. You can see the same story. There was a lot of lateral support there at 28 Rand 50 on ABLE. But again, you had this consistent pattern of lower highs. And eventually that pattern resolved itself, and it resolved itself to the downside, and we've seen ABLE's been an absolute disaster since then. Now, I'm not saying that Exxaro would be like what ABLE has been.
Because presumably it doesn't have anything like the kind of internal problems that ABLE has.
No, exactly. I mean, it's a completely different sort of scenario. But the thing is that if you look at, just understand that the internal trading dynamics of what's happening here, Exxaro looks as if it's very, very similar, and the sellers do appear as if they're the slightly stronger force. And if you're going to see a resolution to that pattern, it's most likely going to be to the downside. So that's something that I'm going to be keeping an eye on in the weeks ahead.
And presumably, I mean, Exxaro to some extent, I'm sure it must have slightly similar trading action to Kumba, which has been, I suppose, even harder hit. But Exxaro, does make money from Kumba, and there is a link between the two companies.
Look, all of your iron ore stocks have been hit quite hard recently. So Kumba, Assor, African Rainbow Minerals, all of them have been doing pretty poorly over the last while. Exxaro has held up better than the iron ore stocks, but when I look at that chart, I think it's a matter of time before we see it breaking to the downside, and that's what I'm going to be looking to potentially trade in the week or the weeks ahead.
Okay, so potential short at around about the 145 Rand level.
Somewhere there, yeah.
Garth, so what does the portfolio look like? You did say it has crept up, and quite nicely so.
Yes, it has. So these are the open positions that we've got at the moment. We've still got our options positions sitting in the background, which will work for us if we do ever get this market correction. And then we've got our platinum ETF, which is up 2,000 Rand there. Aspen is up 4,300 Rand for us. And then this one top 40 futures contract, we're up 2,340. Nice. We're actually up a bit more than that. When I check the market now, I see that we're up even higher than that since I put these slides together. But what that means is we're sitting in just over 307,000 Rand, which puts us up 23% for the year to date.
Okay, so looking pretty good. Good to see you out of the sticky patch of what? 290,000 Rand on the portfolio. And Garth, just to end off with your next course dates, you had one last week. What are I suppose you're going to have one this week too.
Yeah, I'm busy over the next couple of weeks. So this week, Thursday and Friday, I'm in Cape Town. I'm running an Understanding CFDs course on the Thursday evening, and then a full day high probability trading course on Friday. And then I'm in Durban the following week, and Port Elizabeth the 10th and 11th of July. So anybody that would like to attend any of these courses, please email me, garth@traderscorner.co.za, and then I'll send you the details.
Okay, great. Garth, we'll leave it there. Thank you for watching. This has been Traders Corner, and Garth is, of course, the founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.